Hey everybody, it's Daniel here from InfoVest. Hope you're all doing well. So I want to go over this article. It's very interesting. It's a week old. It basically says Fed Bowman signals she favors more than one further rate hike, right? Saying additional hikes will likely be needed. Also says rising energy prices could reverse inflation progress. So, this is the thing, right? Like I said in my previous videos. Although the Fed doesn't want to do things too rapidly, hike too rapidly, and create things or cause things that crash too fast, although it is looking like they are engineering that recession, that hard landing, in order to get inflation down. There are some Fed members who expect that more rate hikes are needed, which if the data continues to be resilient and the economy continues to be resilient and strong, then it's very important to keep these comments in mind from other central bankers and other Fed members, because if that starts to parrot into the committee, the FOMC committee, and if that continues to be the consensus, you're going to see a huge repricing in the bond market, in also the stock market. You're going to see quite panic selling there, because that's when we will probably see maybe 6% interest rates. That's only if the data continues to be resilient and strong, the labor market, the growth components, also most importantly, inflation. And one of Bowman's worries is also the oil prices, the gasoline prices that have been affecting the inflation report. So if that picks up, there's some sort of tensions or what have you, then definitely that can cause the central banks to react, right? Unless there is some sort of credit event or something that comes in. So let me go through this article real quick here with you. It says Federal Reserve Governor Michelle Bowman signaled that she favors raising interest rates again, and probably more than once, suggesting she would move more aggressively than her U.S. central bank colleagues to quash inflation. So although she's one of the many members out there, the other members might, you might see more of a dovish kind of rhetoric or talk from those other members, which is less aggressive, versus maybe, let's say, the Bowman, who is more aggressive on tightening, who is more aggressive when it comes to seeing rates further up, just to slow down, right? Just to slow down that inflation level, just to slow down and get to their target. And we heard from the U.S. Central Bank, we heard that, yes, we can see that, the terminal rate may not be where it is. It can go further, and we will know once we get there. And the question is, when is that? When will we get there? So that's really important. And nobody knows, and even the central banks out there don't know what the true answer is, what's the real answer, and how we go about seeing that change, right? So it's important to continue to watch, news like this, to see articles like this. She also mentions here that Bowman's comments in this article, says Bowman's comments suggest she might have the highest interest rate forecast for 2024. When one official predicted the federal funds rate would be in the range of 6 to 6.25%, which is, again, not far off, right? The rates are around 5.25 to 5.5%. You could get, 2 more hikes, right? And when you look at the projections, right, the projections were around 2 rate cuts for next year, and that could be completely shifted and changed, right? Just like how we saw this year, the expectations of rate cuts this year, and none of that, right? Completely changed to no rate cuts this year and actually one more rate hike this year. So that can happen, and it's all comes down to the resilience in the data, looking at those energy prices and how that plays out. So very interesting article here. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.